Welcome to Investing and Borrowing. Here we'll explore various credit options. Now there are a variety of ways in which you can get access to money. One of those being a credit card. You can get a credit card from a bank or even a store such as Walmart or Costco. You can get a loan from a bank or a short-term loan called a payday loan from a privately owned company. The borrowing limit is typically maxed out at $2,000 and it needs to be paid back within a couple of weeks. You can get a line of credit, which is a preset borrowing limit that can be accessed at any time. You can get a bank overdraft, which means that if your account balance falls below $0, the bank will cover your next few purchases, up to a limit, of course. And you need to be mindful that all forms of credit come with a cost. So let's look at some advantages and disadvantages of various credit options. Now, a bank credit card means you don't need to carry around large sums of money. It also helps establish a credit history. This is important for when you're going to borrow money from the bank, such as a mortgage. They want basically proof that you can pay off your balance each month. Another advantage is that many credit cards offer rewards, such as air miles. Now, a disadvantage is that the account needs to be checked frequently to guard against fraudulent charges. Credit card fraud is very common, so you need to be mindful of that and keep your information safe. They also charge very high interest rates, up to like 20%. Then you can get a store credit card. The advantage of this is that they often have introductory offers, such as a free, say, coffee maker if you sign up on the spot, or they might offer you no payments for 12 months, things like that. So very enticing. But the disadvantage is that there's usually higher interest rates than even bank credit cards. Now, a bank loan offers lower interest rates than, say, a credit card, and you have access to a larger amount of money, which is where you would say borrow money to get a house, for example. You won't put that on a credit card. Now, because you're borrowing typically a large amount of money, you may need collateral, which is something you offer in case you can't pay the loan, something you're going to take from you, or even what's called a cosigner, so someone else who puts their name on the loan. So if you can't make a payment, the cosigner will. They just want to guarantee that they'll get their money somehow. Now, this is often more difficult to obtain, which is why having a good credit history is important. Now, while a bank loan might be difficult to obtain, a payday loan is typically very easy to get. You can walk into one of these payday loan stores and walk out within a half hour with a couple of $1,000s. Now, the interest rates for a payday loan are going to be very high and may even double if not repaid on time, which is typically within a few weeks. Now, a line of credit, like a bank loan, also has a low interest rate. But because you have a preset borrowing limit and you have access to all this money at a low interest rate, then you might be tempted to spend money you don't really have. So be careful of that. Now, a bank overdraft helps to prevent bounced checks or insufficient funds charges. But when you use a bank overdraft, you're probably going to be charged a service charge, and once again, interest rates are going to be high. Now, let's look at the bottom. It says, which credit option would you use for buying, say, headphones that cost $200? Well, you have a variety of options. The most easy one here would be a credit card. That's the type of purchase you would put on your credit card and pay off at the end of the month. Now, you could also get a payday loan. And again, make sure you pay that back in time, because if not, those $200 headphones could cost a lot more. But that is another option. You could use a bank overdraft if you don't quite have enough money in your account. Or you could even use a line of credit. These are all possible options. Now, what about buying a used car that costs $12,000? So a much bigger amount here. Well, the only really two options here could be a line of credit. Depending on your credit limit, you might only have a $10,000 line of credit, right? So that may not be an option, but you could, depending on how much you're approved for, or even a bank loan. But it's not the type of purchase you'll put on a credit card because of the high interest rates. The overdraft is not possible, or payday loan is not possible because it's too much money. Now, what about a mortgage that costs $290,000? The only option really here available to you is a bank loan. It's too much money for any other option.